Okay, recording this video on Sunday the 3rd of June 2018. Do hope you are doing well. So that was quite a week. We had a really big sell-off Monday into Tuesday, and then it held and started to rally, and then we rallied and rallied and rallied all the way back up to the end of the week. So we're sitting at some interesting kind of point in the market. I'll show you like a longer term chart later on in this video. Not that the video is going to be all that long, but I do want to talk about, first of all, a classic little move that we had on Friday's trade. Here is the 500 tip bar chart, continuous contract of the ES, the E-mini with the multiple time frame indicators on. This is kind of the detailed view. That's the system view. And talk about this. This was a classic Crazy Ivan. Crazy Ivan, I think you might remember from Hunt for Red October. Sean Connery and a bunch of other kind of famous people in that movie. Byron A., one of the subscribers to Emini-Watch, coined that phrase, called it a Crazy Ivan. And it's exactly right. It's when the market kind of is moving in a direction and then all of a sudden just goes batshit crazy and moves the other way, and then all of a sudden just takes off in the opposite direction, like this kind of V reversal. It wasn't a V reversal as in bottom of the market for the day, we exhaust ourselves and kind of go the other way. No, it just careened the other way and then reversed and went to new highs. I don't have a minute by minute kind of news service that I listen to or anything like that. And so there was probably something around here, kind of 9 a.m.-ish, that went off. Actually, don't even know what news releases were kind of going on at that time. But there was something probably to like set that thing off in the first place. But it was a classic Crazy Ivan, and we go to new highs. And there's a few things to learn from it. And I'm going to just try and explain those kind of one by one. The first thing is the importance of levels. And the more I trade, the more I just think that levels are absolutely critical. And what I mean by that is historic highs and lows in the market, because that's where all the stops are sitting, and that's where everybody's attention is focused. So don't forget, first thing in the morning, we were just rallying a little bit. We'd not seen blue professional bars at the highs on the 1500 tip bar chart or exhaustion buys kind of happen yet here. That's why I was long. I went long 23 and a quarter as this move was starting to kind of break back up. And because you've not seen blue professional bars at the highs or exhaustion buying, you know that the rally is continuing. So, but the most important level from the 2 days ago, so this is the Friday's activity, Thursday, Wednesday, was the high on Wednesday, and it was 29 and a quarter. Let me see if I can, was it this high? Yes, 29 and a quarter. It was sitting there, just kind of waiting to be run. So we know that there are significant numbers of stops sitting a few points above that high. So, and that's where we want to hit. That's what we want to kind of get to in order to cause the exhaustion buying volumes to go up, the stops to be hit, the amateurs to kind of chase it to new highs and so on. But what happened was we got to 29 even, absolute high. So we were a quarter of a point away from that previous high, and then that really dense blocking of stops sitting there above the market. And so I got out of my position. I actually had my target at 29 and a quarter. So I was in at 23 and a quarter, had a 6-point target on it, 29 and a quarter, which is kind of my stretch target. Got to 29 even. I'm like, why? Why didn't it just touch the quarter point and just go for a little stop run? But it didn't. It kind of started to move the other way. I got out 27 and 3/4 on this little weakness here because it seemed like it just wasn't going to hit. Luckily, because it kind of went back to entry and beyond and then immediately reversed the other way. So it was good for me. I was happy, 4.5 points. That's a good trade for me. First thing in the morning, done and dusted. But then it kind of careens back up, and I was looking at it thinking I should re-enter here. When it got to like 27.5, 28, I was like, it's gonna hit those stops. It's got to hit the stops, because we had not had exhaustion buy yet on the 1500 tip bar chart or the MTF chart. The MTF chart, so we're talking about this activity here, the MTF chart did go and make an exhaustion buy, but it was after we'd busted through that 29. We had all of those stops above 29 and a quarter, and then it went just a little bit crazy. So it was easy money to be had there, coming back up to that high, because we know the stops are going to be hit. We know we've got to go exhaustion high. And of course, there we go. There's a Rambo pattern right at the end, which is those poor old amateurs either entering on that exhaustion high or getting stopped out, kind of right up there at the highs. So it was a classic end to that move there. And there was good money to be had. There was probably 6 points in it for getting in here in anticipation of that running the stops and going to that exhaustion pattern there. So anyway, that is a crazy Ivan. It kind of, it's like a slingshot move. You kind of move the other way. A lot of people kind of getting short at this point, thinking, oh my Lord, this thing is just diving. And then they're wrongly positioned. So when we come back up, they've got to get out. They probably put even more stops above that 29 level up here. And we just know that area is just rife for stop running. On the 4,500 tip bar chart, you can see, yep, there was a little bit of professional profit taking at that high, but then there was a bunch happening right up here, right at that high kind of going on there. So that's the crazy Ivan. Why did we keep on going for the rest of the day? Well, it's the 11 a.m. Window rule. If the market is not reversed by 11 a.m., it'll probably just keep on moving in the direction of the trend and just kind of busting stops by a little bit, point or two, kind of as we kind of go up. And that's exactly what happened. So here's the 11 a.m. window. We'd reached a high here. We had not started to, drop, make significant moves on the downside. So it wasn't a reversal day. And then we just popped those stops each time, just a little bit. So there was that high level, which was 33 and 3/4, 33 and a half, probably that high there. And then we just make it a little bit, bust some stops, a little bit, bust some stops. And, a couple of things going on. First of all, the poor old amateurs here. Amateurs at the high, amateurs at the high, amateurs at the high. Feel sorry for them, but that's the way they operate in the market. And then at those highs, you can see blue professional bars, blue professional up bars taking profits again. These ones at the end of the day, they're not directional. They're kind of closing out positions. We're closing out at the end of the week. They're kind of ETFs, kind of buying in bulk and so on. So I kind of ignore anything that happens, 10 to 3 kind of onwards. Those aren't directionally kind of significant for me, but these are, those are, and those are kind of up there. And so 11 a.m. window shuts. We've still not reversed, therefore we're just going to keep on going in this general direction, just bust some stops and kind of creep on up a little bit. So there we go, crazy Ivan, bang bang. Haven't seen one as good as that in a while, but they do happen quite often. And when they're happening because your heart starts beating. You're like, what the hell is going on? And I'm like looking at my news feeds thinking, what just happened? What just happened? But there we go. So kicking myself, I didn't re-enter just around here to catch that stop run. But, what can you do? Can't trade more perfectly all the time. So what are we doing just in terms of levels in the big picture? So last weekend talked about the importance of the end of trends that were going off, and they went off nicely, and we got that beautiful little sell-off Monday, which was Memorial Day, kind of the overnight into the Tuesday kind of morning session, and that was a beauty on the downside. But then we spent the rest of the week, so that was Tuesday, rest of the week just kind of rallying up, bang, bang, bang. And so now we're at an interesting level. We're back up at resistance on, you can see the clustering of resistance here. So lowest time frame resistance is 41.50, intermediate time frame resistance is 42, and then the support, the longer term support is down here at 70s. But so up here, that is 2070s, not 27s, 2070s. Anyway, so here we go. We're sitting at a couple of resistances kind of up here, and we failed essentially this week to kind of get down there. If by chance Monday we cracked 2700 on the way down, then this thing has a chance, and that was just a weak little kind of push back up and whatever. But just be aware that getting above these resistance levels, kind of into the low 40s, getting above there, we could easily just go for a cracking day on the upside which means we're going to go have a look at kind of the high up here at 29s. And I suppose, if I take off my perma bear hat, you start seeing blue professional bars at the lows here, and that level is holding, and we're coming back up to resistances. System wise, it's all been good. It's all been red, red, red. So we've not broken any supports on the downside. 2700 would be important on the downside, but we're still in an uptrend in terms of the systems. If we back it down one chart to the 135-minute chart here, you can see there we go, pull back to end of trend on the highest time frame here. Little bit of weakness kind of going on here, but then we got blue red bars showing kind of strength, and again getting through the 42 level there could mean that we're off to another kind of blow off type move kind of above there. And again, if I look at it being a little bit more objective, look at it here, blue professional bar on the dip, blue professional bars on the dip this week. That was the Tuesday's activity kind of down here, but they held it here on an intermediate time frame. Blue professional bars come in and we get above the highs of those. Backing it down one more time frame, 45. So here's all the weakness that we were seeing with that drop off into Monday, Tuesday's activity here, and busting above. So it's still showing weakness here, but busting above resistances will break us back into a trend. And on the detailed kind of view here, exhaustion sell bullish divergence, we hold. Exhaustion sell bullish divergence, we hold. Exhaustion sell bullish divergence, we hold. And now this activity. This is into that's Tuesday into Tuesday, Wednesdays. Blue professional bars kind of U-turn. They hold it here. They come in here. We hold it and we're back up. So above this kind of 40 level. Let's see if we get above here. This level at 42s. On this chart it is, yep, it's 41.50, it's kind of above there. It's important. And then even when we look at like the risk on type markets, so EEM is all of the emerging markets, and they're kind of the high beta type movers within the equity space. So this is the rally. This is the beautiful rally from 2017 through whole of 2017 into the top of the market here. Bang, bang, bang. This is the emerging markets here. Poof. Amazing strength all the way into a blow-off move. Now we've had the weakness since the beginning of the year. All these white bars you can see here. Bang, bang, bang. It's a little early in terms of coming for a cyclical cross on the highest time frame here, but again, blue professional bars at the lows. We come back right into that level. There we go, right at those lows. I mean, this support level here was 45, and this is 45 and 15. Blue professional bars over the last few days caught the lows, and we've come back up. So the kind of riskier markets, the emerging markets, maybe there's another leg up to be had. China is one of those kind of big ones. Here we go. So this is throughout 2017. We've had our weakness, and China MCHI, which I made good money on during 2017, was sitting underneath a couple of resistance levels, or one on the intermediate. There's the lowest time frame one, kind of come in having had exhaustion, bullish divergence, and it's holding. So we could be breaking back up into another leg on the upside. Another one to look at is Russia. This one is kind of driven by oil and gas to some extent, but there's the strength we had, the weakness that we've had, and we're due for a cyclical cross on this market here. And again, if you back it down, there's all those blue professional bars kind of come in here. So maybe it's not, we're not ready for that kind of big drop quite yet. Maybe we've got to go breach into the 40s and kind of go up and test again. So anyway, as always, I'm like following my day trades kind of day by day and looking for blue professional bars on the 4500 tip bar chart. They're the ones that will show you what to do, when to get in, when to get out. So just watch those super carefully. I've not given up on the downside break. 2700 is the level to look at. That'll be confirmation that we're going down, down, down. But at the moment, looks like we want to break into the 40s and go see where it takes us. So I hope your trading is going well, and looking forward to another week's trading.